So, good afternoon, everyone. So, we'll be discussing another editorial now. It's an editorial related to the financial world. So, before starting the editorial, there's certain I'll give you a crux of it so we get an idea. So, if I'll be explaining later on. So, we do have a knowledge, like a bit what this editorial is about, because there are certain words, the meaning of certain words that we need to know. So, the editorial today is about the recent changes that have been taken place in the various rates fixed by the Reserve Bank of India. We know that we have a monetary policy committee that decides the various rates, talking about the repo rate, the reverse repo rate, bank rate, marginal facility, and there are many more. So, this committee meets after 2 months every year. After 2 months there is this meeting where this rates, if something is going, there's a turmoil going on in the economy, they try to change it or uh, shift it a bit. So that's what has been happening. So before that, I'll just tell you the meaning of 2 3 words so that we don't have problem in the further reading of the article. So let's talk about inflation. I think that that's a phrase that we all know. Inflation is nothing but when there is a general increase in the price of various commodities, like goods and services in an economy. It's not just about one thing being expensive, but collectively everything being expensive. So that is what is inflation. And then you'll be reading a word known as repo rate. So repo rate is nothing, but it is just the rate at which the Reserve Bank of India give loans to the various commercial banks for a short period of time. The interest that is being charged. So that's what the repo rate is. And basis point, BASIS, POINT. 1% is always equal to 100 basis point. So they'll be here continuously talking about increment in the basis point. So always remember this thing, this basic small calculation of mathematics, that always 1% is equals to 100 basis point. And there's another thing, like I told you about what a monetary policy committee is. So now let's start the editorial without further ado. So yeah, Patrick, please scroll. Patrick, scroll, please. Patrick, are you there? Okay, yeah. Just scroll it, just uh, start it from the beginning. Yes, stop. So we'll start. Focused on inflation, on the RBI's rate hike. There has been a hike in the repo rate, which we'll be talking here. So I'll give you a glimpse about it then only. A rate increase was needed to prevent inflation expectations from stymieing growth. Now, this increase was very much needed. Why? Because we have to prevent the inflation that's been going on in the economy from stymieing growth. Stymieing growth means in order to prevent this growth from hampering. Now, this inflation obviously is hampering the growth because if some things are becoming expensive, we as consumers won't purchase, and which will eventually affect the cycle of economy. So this is something that is hampering the growth of the economy. So this was very much needed, that we need to tame inflation right now.
He is facing some issue.
Yes. I do think, wait, let me try sharing my screen. I'll try. Okay, yeah, let's start. The RBI's Monetary Policy Committee on Friday raised the benchmark interest rate for a third straight meeting as policymakers battled to rein in inflation that has persistently remained at or above the prescribed upper tolerance threshold for 6 months. So now what they're saying here is that on Friday, the Monetary Policy Committee that I already told you about, they had a meeting, okay, where what were the various important decisions that were taken. The one that is very much important was that for a third straight month meeting, again, the rate has been increased. The rate of what? The rate of repo rate has been increased. And why is it being increased? Because it is saying here is that these are the exact quoted words which they said, remained at or above the prescribed upper tolerance threshold for 6 months. What is this upper threshold? I'll tell you. So now it's basically being decided by the government and the various financial organization of India that the inflation was supposed to be at 4% plus minus 2. What does this mean? I'll explain that if our economy is facing inflation, it shouldn't either move less than 2%, because if you subtract 4 minus 2, it becomes 2, or it shouldn't increase from 4 plus 2, 6. Like the range is from 2% to 6%. But if you have been consistent throughout and read the newspapers, you might have seen that for the 6 months, this band of 6% has already been increased. Like throughout, we have been facing either 6.0%, 0.1%. It even reached to more than 7% in the month of April. That was the highest. So because of which this decision of raising the interest rate was taken into account, and why it's being continuously rising. So this is what they were telling, and this is what the upper tolerance level is. The upper tolerance level is the 6% that I'm talking. Okay. Now let's move on to the next paragraph. The 50 basis point raise takes the policy repo rate to 5.4% and more significantly to a level last seen in the pre-pandemic second quarter of fiscal year 2019 to 20. Okay, let's understand what they're trying to say here is. Now, if you talk about, I'd already told that the policy repo rate has increased to 50 basis point. So 50 basis point is what? 0.5%, because 1% is 100 basis point. So now the policy repo rate has been 5.4%. Okay. And now if we compare this to the previous year, like the pre-pandemic, before the pandemic hit our country, in the second quarter from 2019 to 20, it was 3.2%. That is what they're trying to say here is, as the MPC's Jainath Verma had pointed out in June, when the MPC had recommended a 50 basis point increase. So now this was already there in the mind of the Monetary Policy Committee authorities that we need to take decisions now, otherwise things might go out of hand. So this is what they are talking here. Let's move on to the next paragraph. Patrick, please scroll. Patrick, scroll. Wait, I'll try to share my screen if you're facing some issues. Okay, just tell me, is it visible to everyone?
Yes.
Yeah.
Okay, yeah, we'll start from here then. The impact of the 90 basis points total increase from May still left the real policy rate at the time lagging behind the RBI's 100 basis point increase in retail inflation projection from year 5.7 to 6.7. Let's make it a bit easy. Just focus on what I'm saying. You'll get an idea. So now what happened was, I already told you this committee meets after every 2 months. Okay. So now this committee has been meeting after every 2 months, and in every 2 months, they are continuously rising this repo rate. Why? Because I told you we are exceeding the 6% limit. So they are saying this, that talking about this current financial year, this one, there has been inflation ka increase from 5.7% to 6.7%. So 1% increase has been there. And I already told you 1% increase is always equals to 100 basis point. So that is what they're saying, that till now, 90 basis point increase had been done in the repo rate. But our projection is 100 basis points of inflation. So still 10% is left. But after having this meeting, what we had on Friday, 50% basis point has been increased. So 90 plus 50 becomes 140, and the threshold is of 100 basis point. So we are 40 points more than that. Is it making sense, guys? What I'm trying to say? Are you getting it?
Very well.
A yes or no?
Yes.
It is now, let's come to this line. It is now only that the cumulative increase totals 140 basis point. So now 90 plus 50 has made 140 basis point change has been done and puts the central bank slightly ahead of the curve. Why they are saying slightly ahead of the curve? Because we are projecting the inflation to be 100 basis point, and we are talking here that we have already increased the rate to 140 basis point. So 40 extra we have. So that is why we are saying that now things might go a bit better. Let's move on to the next paragraph. Still, as Governor Shaktikant Das acknowledged, consumer price inflation, even if off April's 8-year high, remains uncomfortably high, with inflationary pressures broad-based. So now what they're saying here is that even though we are trying to increase the repo rate, still we must acknowledge that the inflation that we are facing is uncomfortably high. It's there in quotes. I've already told you, whenever something is there in quote, it means that they are quoting the exact line of those individuals. And uncomfortably high is a financial word that we use when it comes to describing any problem that an economy is facing. With inflationary pressures broad-based means that inflation is not just restricted to one particular area, but it is broad. We are facing inflation or rise in price everywhere, not only in goods, but even in services as well. As with the MPC's own forecast for the second and third quarter, pegging retail price gains well above the upper tolerance mark of 6%, 7.1%, and 6.4% respectively. Okay, I'll tell you this. First of all, let's understand the meaning of pegging. Pegging means fixing. Now, what happens is that if you know a bit about the financial world, every year, there are various financial institutions that predict the GDP of an economy. GDP is the gross domestic product. So various do that, but at the end, what really matters is what is the NSO decides. So that is done only after this financial year will end. That is next year. Okay. So now what happens is that if you are aware, there is a financial institution called the IMF, International Monetary Fund. It tells us about the GDP forecast, about the various GDPs of various countries. Morgan Stanley is another company that decides. Moody Investors is another one. So everyone, they just try to decide, they forecast that yes, this country will have this much of GDP, and they constantly change it. Now, why do they do that? So that the people, those who try to invest here, they get an idea. Yes, if this country is facing a smooth growth, so it's better to invest here. So that's why they do it. And not only about a year they decide, but every quarter also. And we know there are 4 quarters in a year. So here they are talking about these quarters, 6%, 7.1%, and 6.4% respectively. That is what they're trying to say here. The rate setting panel had little option but to continue the withdrawal of monetary accommodation to prevent inflation expectations from getting unmoored and stymieing growth by retarding consumption. So now they're just simply saying here, if you just, I won't go much in detail, but the depth of this is not important. Just they're simply saying here is that this inflation's upper tolerance mark has been very high. See, 6%. It's just the threshold. 7.1 is another thing which is high, and 6.4 is also high. So they are saying here is that the rate panel setting has made, like, they're continuously trying that we shouldn't face this inflationary pressure. And because why? Because it is timing the growth of consumption, means it is destroying the consumption pattern of we individuals. Prices are rising, obviously we will consume less quantities. So that is what this entire passage was all about. From an external sector and external rate perspective as well, globalized inflationary surges are promoting policy tightening in advanced economies, that is in turn roiling currency markets, including appreciably weakening the rupee and adding imported inflation to the mix. Now, they are not just talking about the inflation that is being faced within our country, but they are saying that there are certain external factors as well. If we talk about the globalized inflationary surges, means at global level also inflation is happening, because of which we are facing many problems. And it's not just we individuals, we Indians that are facing, but in US also you might be seeing that the condition is not that good when it comes to inflation. Sri Lanka, we already have an example what's going on there, the crisis. Tightening in advanced economies, like there also they are having this problem. And that is in turn roiling currency markets. Roiling means it's disrupting or causing problems or irritations in the market and weakening the rupee. Yes, obviously it will happen. Prices are rising everywhere. Our rupee won't have any value in the foreign trade. And adding imported inflation. What is imported means when we purchase goods from other country. So that is what is happening. Inflation is also coming from the outer world. That is why it is saying that it's not just the inflation that's happening within our country, but outside as well, which is causing this turbulence. Let's move on to the next paragraph. Noting that successive shocks of the global economy had led multilateral institutions, including the IMF, to lower their global growth projections and highlight the risk of recession. I already told you, various financial institutions, they forecast the GDPs of various economies and of the entire world. Now, these the successive shocks that the global economy is facing. Now, we'll be coming to know what are the successive shocks they are talking about. Because of these, even the IMF has lowered the global projection. And why? And highlighting the risk of recession means that the entire world can go under recession, means when there is a lot of unemployment is everywhere, people are not able to get jobs, and the entire world is not working in a proper manner. Mr. Das, who is Mr. Das? The governor of RBI, remarked, disquietingly means discomfortingly, globalization of inflation is coinciding with deglobalization of trade. Globalization of inflation means inflation happening in the entire global world is coinciding, means it's matching with the deglobalization of trade, means trade is not happening in every corner of the world. Why? Because of the crisis that we already know. Now we'll move on to what is the biggest problem here. Russia's invasion of Ukraine and the resultant impact on trade flows from the conflict zone have upended supply chains for several commodities and added to price pressures for a range of goods. This is something that we all know. The invasion that took place in Ukraine because of Russia, it has obviously hampered the trade flow. Goods could not be there. Russia was cut off from the outside world. No country was supporting it except a few. And because of which, obviously, not only we, but the entire world has faced a lot of conflict, and supply chain was disrupted, which added to the price pressures for a range of goods. Obviously, it's very easy that something which is not available everywhere and which is limited, the price of that increases. That's how the theory works, right? The demand and supply, that if you have read. So this is what they are trying to say. And when price rises continuously, what happens? Inflation occurs. And then we get trapped in this cycle. So that's what they're trying to say here. The latest geopolitical tensions triggered in East Asia by US House Speaker Nancy Pelosi visit to Taiwan in the face of Beijing's dire warnings and China's decision to respond with aggressive military drills around one of the world's busiest shipping lanes could have impact global trade at a time when uncertainty and risk aversions are already high. Another thing that's currently being happening is about the geopolitical tension that's being taken there in China, where they tried to, what did the, right, it tried to aggressively come and capture this shipping lane, because of which tensions are there. And why this? Because it is impacting the trade. So this is another reason, the current one that we're facing. Mr. Das' confidence in the resilience of the economy's fundamentals, notwithstanding with the probably opposite for the MPC to hereafter, heed Mr. Verma's exhortation by providing projections of the future path of recovery rate, policy rate. It's a very heavy line, okay? Very heavy. It's very difficult to interpret. I'll make it a bit easy for you. What they're saying here is that Mr. Das, we all know, governor of RBI, he has this confidence in the resilience. Now, what is resilience? Resilient means that the ability to bounce back from a situation, like how much we are efficient when something bad happens, we are able to recover. So that is what he said, that he's saying that our country, he has this confidence, this, yes, we are resilient in nature, and it can help us in coming back from the turmoil that's been there, the inflation that's been there. And it is probably opposite. It doesn't mean opposite. Opposite means apt for the MPC to hereafter heed Mr. Verma's exhortation. Now, Mr. Verma, if you remember, he was a member of the MPC, the Monetary Policy Committee. He had also said something. Exhortation means encouraged, that if we try to project the future path, then definitely it might help us right now. I'll give you an example. Suppose if you're a student, okay, and you have your exams next month. So, what will be better for you? If you try to plan out right now, that chalking out the timetable for every subject and giving due time for the one in which you're weak, definitely you'll score good because you have a strategy beforehand and you're implementing it. Rather than working on the one night fight that we call, it won't be of much beneficial. You might pass, okay, but that won't help you in the long run. So that's what they're saying, that Mr. Das is saying that we have a resilient economy. We might have the ability to recover. And Mr. Verma, the member of MPC, had already said that if we try to project the future path right now by highlighting all these policy rates, then we might have a bit of easiness in the near future because we know the way or the track how to move ahead. So that's what they were saying here. This would help anchor price gain expectations firmly and surely enhance the RBI's inflation fighting credentials. So now if we try to do this by projecting right now and working towards it, it will help us to anchor price gains. What does anchoring price gain means? Try to control, like anchor is where it's there in the ship, that's used. Where is it used? That is used for making the ship move smoothly in a sea, right? So that is what they're saying. If we try to anchor the price gains right now, then it will surely enhance RBI's inflation fighting credentials. Then definitely the RBI, which is trying to fight this problem of inflation, we might do it. But all we need to do is act vigilant right now and try to take steps that are much needed. And what was the biggest step that was needed here was to rise the repo rate by 50 basis point. That was it. So yes, we are done with the editorial now. So let's just discuss the tone. So what do you think is the tone of the article? Anyone?
It was informative.
Informative.
Analytical.
Okay. Okay. Analytical. Anyone else with a different answer, or you just want to add on? Anyone else? Okay. No one. So yeah, I'll tell you. It wasn't exactly, Patrick, informative, because they didn't exactly try to just give information. The author is trying to tell us every situation that's been happening. If we talk about the outside world, the problem that's been faced in the outside world also, and talking about the financial institution, that is the IMF, internal problems and turmoils also. So proper analysis was given there of the Monetary Policy Committee meeting that was held on Friday. So yes, the tone is analytical, I would say, not informative, because they are analyzing the entire situation. Like even though the policy repo rate has been increased to 50 basis point, why was it done? That is important. So he's trying to give justifications for that. And what was the situation before? How much basis point has been increased? Proper analysis is given, not just information. So yes, so the tone for today's editorial is analytical. So yeah, we are done with the editorial now. Wait, let me stop sharing the screen first.